there, I'm Lisa Doyle with J. Rock with Realtors, and I have a special guest with me today. So we oftentimes have clients that come to us with questions, just everyday questions about their homes and their circumstances, or even for your parents, and we want to provide solutions. So I've invited Amanda Keith.
Hello.
Hey, thank you for joining me.
Thank you for having me.
Thank you. Yeah, so Amanda, tell them where you work.
I work for Retirement Funding Solutions, which is a Mutual of Omaha Company. I specialize in reverse mortgages, both the federally insured reverse mortgages and the jumbo reverse mortgages.
Perfect. So when I first met you and you walked me through what you were doing for a few clients, I thought this is something that I want to share. But before we do that, tell them a little bit about your background, because the fact that you have the background you do allows you to be much more knowledgeable. So,
Sure, thank you.
Yeah.
I am licensed as a CPA, so I practiced accounting in Texas. I was with PricewaterhouseCoopers as an auditor, and then I was with PepsiCo as an accountant, and I was also the controller of a private school, all in Dallas. And then I moved here and switched careers.
Very good. Well, and what I loved about the way you walked me through what we're going to share is that you, because you know numbers so well, you made it very simple, and it made sense to me that as something that our clients and our clients' parents, which is what we were talking about earlier, might find use for. So let's give them a little scenario of our conversation that you and I had the other day.
Sure.
So you're currently helping a client who came to you with a question about his future.
Right.
So tell us a little bit about his...
Right. I have a client who will soon be 62, and he's heard of the reverse mortgage line of credit, and he's curious as to how it might work for him. He owns his home outright, and it's a single-level home, so he feels comfortable aging in place there. He's also got a unit out back that his in-home caregiver could live in if he decides to live out the rest of his life and needs some in-home care. So he's looking to incorporate his housing wealth into his retirement strategy by securing a deferred repayment line of credit, and that line of credit is guaranteed to grow larger every year.
So what I love about this is we oftentimes have clients who come to us thinking that selling their home and moving is their only option. And we want to give them options where if they want to stay and they truly don't want to leave their home, but they don't have, like you said, long-term care, a long-term care plan, this is a solution that could help them, and they could stay in their home forever, and their family still would receive their home at one point down the road, and so it's a good solution. So let's have you walk them through what you showed me and what you showed your client.
Great.
And kind of what the plan is for them. Yep, so I'm going to step out of the way.
So this is the cash flow survival tool. It's the HECM Home Equity Conversion Mortgage Line of Credit. So in this example, we have a 62-year-old with a home value of $680,000 or more. This particular client doesn't have any liens on the property. So what I can do, I can set him up with a line of credit that can never be reduced, canceled, or frozen as long as he's living in the home and paying his property taxes and homeowner's insurance, HOA dues if that applies for him or her, and maintaining the home. So at the outset of the loan, I would have a $212,000 line of credit set up for him. And the great thing about this line of credit is that it's guaranteed to grow larger every year. So the line of credit grows by the interest rate on the loan plus 0.5% per year. There's no other line of credit like this. So you can see in year one, he sets up the line of credit for about $212,000, and he's just setting this up and letting it sit there and grow every year. He doesn't plan on touching it at all.
So what I love about this is people hear about the reverse mortgage, and it used to have a little bit of a negative tone to it, right? People were concerned. What I love about what you're sharing is they don't have to use it unless they want to.
Exactly.
Or unless they need to.
Exactly.
But it's there for them.
It's there for them if and when they need it. They can use it in any amount at any time. And this man's just setting it up for future use. So you can see at year 5, under current interest rates, his line of credit will have grown to $300,000. He'll be 67 then. In year 10, he'll be 72. His line of credit will have grown to $423,000. Year 15. So let's say he might start needing some in-home care in year 20. He'll have $840,000 in a line of credit. And remember, this line of credit can never be reduced or frozen or canceled.
And what's great for people to know is he's not then making payments on this.
No monthly mortgage payments. All repayment is deferred until he permanently moves out of the home. He's protected to live there until age 150. No one's lived that long yet, but we never know.
That's right.
So yeah, it just keeps growing. Whenever he does permanently move out of the home, he or his heirs pay back whatever he's borrowed, plus the interest that's accrued on what he's borrowed. That's all.
Now, how do they determine the interest rate? Is it based on today's rates?
The interest rate is based on, so it is a line of credit, so it's a variable interest rate with a 5-point lifetime cap. Interest rates are based on the lender's margin plus the annual LIBOR, and it resets annually. So this is based on, and the rates are very in line with FHA and VA loans. This is using today's rates, but since it's growing at the interest rate plus 0.5%, if rates go up, which we're expecting they might, then this will actually grow faster. So in 20 years, instead of having $840,000 available for him to use, he might have considerably more.
Well, and I love this because, like I said, so many of our clients come to us, or they're coming to us because of their parents.
Right.
You know, sometimes they live out of the area and their parents are local. And they come to us and say, our parents are aging, we don't have a choice. We're going to take them into a care facility and sell their home because they don't realize that this is an option.
Yeah.
So what I love this is that they can stay in their home and, you know, live out their years, their golden years.
Yeah, with dignity and grace.
Exactly.
Exactly.
So
this gives them money to live.
Yeah, no, I love that, Amanda. So what we're going to do is we're going to share your information.
Great.
And then if they have questions, they can certainly reach out and ask, you know, circumstances that you can walk them through. And what's great about Amanda's business is you have many more solutions to other issues that people experience. This is just one example.
This is just one. So if you do have liens, I can help people with liens.
Yep.
If you want to use a reverse mortgage to purchase a property, I can help purchase a property. With Lisa, we can help you together to purchase a property with no monthly mortgage payments. So there are all different kinds of ways to use this. I've helped people going through divorce and settling estates to help use it to settle estates. So just feel free to reach out with any questions you have.
Yeah, thank you so much. And we are going to have an event where we're going to answer more of our clients' issues. And I'm, you know, planning that you maybe come along and share some information more detail there.
Absolutely, I'd be happy to.
Yeah, so thank you so much for watching. You're welcome. You guys call us if you have any questions. Thank you so much.